Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is CPI Live. Today, we're going to look at the latest installation of American inflation data. I think that it's going to be an interesting release. We're going to recap exactly what this could mean to interest rate expectations after it happens. But before, we're going to give you some key levels to look at, some live analysis of the event itself. We're going to trade the 9 EMA strategy, which I'm going to talk about in a second. We're also going to trade the 920 EMA crossover. We're going to do that as well because I see potentially a pretty good one setting up on the US dollar, Japanese yen. We're going to look at that. We've got metals. We've got the pound dollar. We've got the US 100. We've got Bitcoin. We've got a trade update on Bitcoin, a level that we need to know going into the weekend. And then also we'll take any questions that you guys have. I think it's going to be interesting. I think inflation is always one of the biggest catalysts for volatility in the market. And we typically see two events that really shake things up from an economic report standpoint. U.S. non-farm payrolls, CPI, US CPI, Consumer Price Index. So it's absolutely big that we understand exactly what's happening here today. I think it's going to be an interesting day. I really do. I'm calling for a surprise. I think that it's not going to be as good as it's supposed to be. And I think that's really going to change the Fed's, I would say, the Fed's outlook towards what they are going to do in the next 6 months. It's all interrelated, guys. Today we're looking at inflation. Wednesday we were looking at NFP and jobs, and what it all is about is getting inflation low, jobs high, and figuring out which prime interest rate satisfies both ends of that equation. Very difficult for the Fed to do. They haven't been very good at it over the last 5 years. Let's be honest. Since COVID, it's been an absolute joke. Monetary policy, cut rates to zero, then try to restore pricing stability. Oops, you can't do it. So there's a lot going on here. We're going to trade it, and we're going to have a lot of fun doing it, see if we can make a few bucks. So let's see, out in YouTube land, good to see everybody out there. Let me see, one is Islam channel, good to see you, one. Tony Michael, good to see you, Tony. Welcome, Rawlings. Alan, Alexis, go long on the metals. Alan wants to go long on the metals. I don't know about that. We're going to take a look at that here in a second. Alan, short the dollar. I like shorting the dollar for the rest of the year. I don't know about today. Let me see. There might be a conflict of data. It's so tricky. There will be. Almost guaranteed, Alan. Almost guaranteed. Let me see. Sixth, y'all. What's good, Shane? Everything's good. Money never sleeps. I've been up since, 4:30. I've been up for a couple of hours here, 4:30 a.m., so money never sleeps for me. I've been up for a while. We're getting ready for this. I think we're going to be in great shape. Tina Jin, good to see you. Tina, always welcome. If you guys have any questions, be sure to ask. Let me see. Community of traders around the world. You got it, 300. Protect your necks. Laugh out loud. Buy low, sell high, and stay out the middle. Say no to lose review. Yeah, I get it. We make some money in the middle, but maybe not today. We made money in the middle. Let's see, yesterday was a pretty good middle day. But today, we're going to find out. All right, guys, with enough ado, let's get right out to price action. I want to go ahead and just run through a quick trade update. I like to do these periodically. Haven't done many this week because nothing's really happened but with regards to our levels. But you've got Bitcoin here. I've got a yearly chart on Bitcoin. A lot of folks laugh at that, but that's okay. I want to know the macro picture of Bitcoin at all times. And right now, your yearly uptrend is still intact, but it is hanging by a thread. Where we've tested that 62% level, which is right down there at 57.8. Got a tremendous bounce. So we're really looking to bid somewhere in that zone. If we could get a 58 bid, I think we're going to be in great shape down there. But if this area does not hold right around 58 or 57.8, this sell-off could get very, very serious. I'll just say deadly. It's going to be deadly to the Bitcoin bulls, the guys that are long from 100,000, long from 75,000. If you do see 58 wiped out, 57 wiped out, you're going to 39. And the question from 39 is not going to be, are we going to recover? Are we still going to 1 million, 2 million, 3 million for a Bitcoin? The question is going to be, is this market going to collapse down to nothing? And why is the selling so big? At this point, we think some short covering has been a big part of it. We think that there's been a lot of profit taking up around 100,000 and even more profit taking probably right around 75,000. And right this minute, it just doesn't look good for Bitcoin. Now, that being said, long term, could it be great? Yeah, this could be the dip of all dips. We might be looking back on this dip in 5 years going, wow, remember when you could have got Bitcoin for $67,000? I don't know that that's going to be the case. I see a long road back. I think we're going to come right down in here, probably test this zone eventually. I'm not ready to say that just yet because this area, this 58 area, is absolutely a huge deal for Bitcoin. So definitely keep an eye on that. A lot of people talking metals today. I want to pull gold out right now. This was really a hell of a plunge yesterday. I was watching this one as it happened live. I talked with a trader last night based out of the UK, a gold trader. And, we were sitting around scratching our heads going, that's one of the bigger gold candles I think I've seen in maybe ever. I mean, that's a 30-minute gold candle right there. We came off 3.25%, 3.21%. That's staggering. We'll take a look at what's happened since then. You know, the idea was very basic. Just take sort of a bid from down here beneath that liquidity sweep, the end of that bearish market structure. Stop losses here. You're looking just to get some decent value and sort of play us back up into this gap. It worked like a charm. It really did. Now, we didn't put that out as a trade idea. I didn't do it live or anything like that. But that type of thing really is how a lot of traders approach these markets. So when we're looking at gold today going into this CPI release in 8 minutes, there's a couple of things that we must know. Number one, this area right in here is vulnerable. And what I mean by vulnerable is this is what we would call a chain. This is a chain of events. This chain is thin. These price points have not been debated. They just sort of swept through, and you'll notice what is the common denominator right in the heart of that candle. 5,000. Now, I went to ChatGPT yesterday. I actually put this out on X, and I said, ChatGPT, oh, ChatGPT, what happened to gold? What happened to gold at about 9 a.m. Mountain Time? And ChatGPT spit out a bunch of nonsense. And I said, no, but what really happened? Come on, the god of AI, what happened? They said, well, essentially you had a bunch of sellers come in and they wiped out all of the shorts, all the stop losses that were beneath 5,000. And then the momentum algorithms kicked on and drove it even further. And I said, that sounds like you've been listening to me, ChatGPT. Now, in this instance, I don't buy it. I don't think that there was that many stop losses right under 5,000 and not enough to bring us all the way down to, $120. I mean, we've got to get realistic here. So what happened here? I have no idea. My guess is a large institutional block sell, and that did flip the momentum algos on. But right now, the question for us is this range. Is this range legit, and is the run over? That's a big range for 30 minutes. Or are we going to creep up and fill in? We have Alan in the trading room says, buy the gold, buy the gold, buy the gold. Well, maybe. If you were going to buy gold and carry it into this event, what would you do? I don't advise it. I would be on the sidelines for this. If, in fact, we get an opportunity maybe to test this area right up above 5,000, maybe up to 5,025, I feel relatively confident if we get above 5,000, we go right up to 5,025. Fill this chain in. So we're watching it closely. Right now, I'm nut flat. I don't have anything on. It's a dangerous, dangerous time to be doing anything in metals just because that CPI number is going to drive things wild. All right, let's get out to the Great Britain Pound US Dollar. Great Britain Pound US Dollar, interesting situation. This is sort of a workup that I did yesterday, 135.41. Absolutely beautiful, monthly 38%. And you can see that convergence with the daily, really an incredible 3 days if you're trading the pound dollar. Pullback zone right there, right around 135.40. That could be a pretty good bid. So we're going to be watching that closely. US 100, another level that I'm sort of infatuated with, 24.5, 24,500. Interesting stuff right there, 78%, 24,406. This zone right in here is very important to me. If we take out this 24.5 level, maybe 24.4, then we're running at this swing low, and the game has changed dramatically for U.S. stocks. We're not there yet, trading right at the daily 62%, but if we come off hard, things are definitely going to change when we're talking about U.S. stocks. So a lot going on there. Let's see, Andrea Garwell. Good to see Andrea. Welcome, Bobby Bob. Always good to see you over in our How to Trade community. We've got a couple other things that we do need to go over here. Let me see. Muhammad this is gold to buy or sell. Don't do either yet. Wait a minute. I technically can't do that. I can get in trouble for telling you exactly what to do. Understand it's high risk. I'm going to be looking to get long above 5,000. But we have to wait and see what CPI does. We have to wait and see for this thing to set up. That's absolutely huge. What would a positive outcome with the data today? Yeah, I'm going to go ahead and review what this means for us right now. Muhammad, a seller, a buy. It's tough. Seller, a buy. Doing either right now is high risk. But we'll have an idea in about, T-minus 7 minutes or so, 10 minutes maybe. 10 minutes max, we'll have a trade. Let's see. Packham, good to see you, Packham. How you doing? All right, so the bottom line is this. When we start talking about fundamentals, we're talking CPI today, Consumer Price Index. What does it mean? How does CPI impact the Forex? A low CPI, that means if it comes in under expectations, is going to be bearish for the U.S. dollar. Why? It's going to suggest that inflation's in check, and you're not going to need to hike interest rates and maybe even cut interest rates is what we're talking about now. We're in a rate cut cycle. So the idea there is, okay, if we get a low CPI, we're going to cut interest rates, devalue the dollar, send everything else up, and life's going to be grand. That's the idea with a low CPI. High CPI, what does that mean? It means that it's going to be bullish for the USD. A high CPI suggests that inflation is rising, and if it's not persistent, maybe it's entrenched. We're getting way ahead of ourselves. It is entrenched, but high inflation typically means the central bank of the world, the United States Federal Reserve, is going to have to raise interest rates to try to bring that inflation down. Remember, central bankers have two things they have to do. They have to, number one, promote pricing stability at all costs, and they also have to promote maximum employment. So they promote maximum employment by cutting interest rates, putting more money in the system, fostering economic growth, right? Well, on the other hand, you have to promote pricing stability and ensure pricing stability. You do that by raising your interest rates, reducing the money supply, and making sure that those dollars are worth something at the end of the day. Sort of a tightrope. It's been an epic fail in my view. I've been very hard on the Fed over the past 5 years. US CPI, this is what we're expecting today, 0.3%. We're really expecting things to come in line. The key numbers that we're watching is going to be CPI year over year for January, seasonally adjusted. We're looking for that to come down to 2.5 from 2.7. That's a big number. Core CPI, I'm not going to get too carried away with core because core separates food and energy out, which in my view, you need them in there to get a really good idea of what's happening with inflation. But we're expecting core to tick higher. We're expecting CPI to be normal, core to tick higher, and the reason why is you're taking out lower energy costs to really begin the year. Really, what I like to focus on, instead of these growth rates, and these are all growth rates, everybody focuses on growth. I like the raw data. U.S. Consumer Price Index, we're expecting about 325.41. Now, what that will mean is that'll put us right here with sort of a plateau in our index data. You can see that since COVID, we've just been on a rocket ship north, steady growth. We had a little bit of a plateau back in July of 2022 when we thought we were out of the woods. Believe it or not, the central bankers thought we were out of the woods then. We weren't. Prices just have kept going higher and higher and higher because that is the new world that we are in. We're in a world where fiat currency doesn't mean much. Commodities are everything. That drives prices through the roof on everything from cheese to eggs to gasoline to a bar of gold. That's the bottom line. So we're on a rocket ship there, but we are showing signs. We've slowed down the last couple of months. I'm fascinated to see how this raw data pans out. We will be sort of reviewing it right here. As soon as it drops, I will read the number, and we'll be on. Remember, if you want to trade any of this stuff, check out Switch Markets. They've got all the markets covered for you. 9 EMA strategy. This is the new toy that we put out. It's interesting. This is from How to Trade via Switch Markets, 9 EMA strategy. Pretty good stuff. So you just go ahead, you give that a click, you enter your email, get your strategy pack. It'll download for you, and then you're just going to go ahead and open up a zip file, and it's going to have a PDF for you, and it's going to have a MT5 expert advisor that you can add right there, the expert advisor that you can add, and I show you exactly how to do it. In that video, you keep cursoring down. There's a little bit about me on there, but you can also watch the full video, about 8 minutes, on exactly what this thing is, how to add time zones, to how to do all sorts of things. So took a lot of pride in building that stuff for you. Be sure to check that out. I put the live link in the YouTube chat, so be sure to check that out there. Go ahead, enter your email, get started trading it today. All right. What we have going is an interesting situation. This is one of those that I'm confident that we're going to get a decent read, but I think it's going to be a surprise. And it's coming out in 1 minute. So let's go ahead. Let's get out to the U.S. dollar, Japanese yen. This is a 920 crossover. We've got brewing on the 4-hour chart. That's going to be a pretty good one. Okay, so we've got the market moving right now. CPI has just dropped. Let's have a look. Let's take this down to a 1 minute chart. I want to go to a 1 minute chart on our dollar yen. So there it is. There's a dollar yen right here coming off in a big way. Fascinating stuff. So what did the CPI release? Consumer Price Index for January 2026. The Consumer Price Index for all urban consumers increased 0.2% on a seasonally adjusted basis in January. The U.S. Bureau of Labor Statistics reported today, over the last 12 months, all the items index increased percent before seasonal adjustment. All right, that's absolutely fascinating. So when we're thinking CPI, we just saw the increase was 0.2%. So let's go ahead and see if I can get the full Monty here. I want all the numbers. You can see right now the U.S. dollar is losing strength, so that tells us immediately that it's going to be a pretty good or a pretty dovish print here for the dollar. Look at this, just cratering, absolutely cratering. We're going to have a pretty good opportunity maybe to buy a discount. Let's step back for a minute to our longer term levels and see if we can find a trade. Okay, this is exactly what I want to see. Monthly chart, U.S. dollar, Japanese yen, right here, Fibonacci retracement, spike low to a spike high. Where are we? Do we have a chance to buy it? All right, about 52.40, 152.40 or 152.50, probably a pretty good zone there to bid. 62% 150. We're not going to get a shot at that today, but still, that's going to be an interesting area. The monthly 9 EMA is present right there. You've also got a 50% level. There's going to be a lot of bidders at 152.50. If we get a chance down there, that certainly is possible. Let's go back to our 1 minute chart. So if you were trading a 1 minute on this crossover, you would have a signal to sell right there. That's what that big purple bar is. We don't want that. You don't want that. That's a news bar. We call that a news bar. You don't want to get in on that tip because, well, you're seeing price sort of retrace and fill in to that initial candle. So be very careful if you're looking to do something like this. We're going to get out to our 9 EMA in a second. I do want to see what's happening with Bitcoin. Okay, not much has happened with Bitcoin. Gold. How about gold? Okay, that right there. Alan, that answers your question. Do we buy gold? Don't we buy gold? I go 5K. 5K is everything. Look at that. Look at that right there. Look at that spike high. 49.99.95. Key numbers are everything in this market. 5,000 is everything. I'm not even considering buying gold unless I'm bidding it over 5,000. You have to be very careful with what you do, especially when you have supercharged key numbers like 5,000 in gold. That is absolutely imperative that we understand that. If you're buying here, if you bought right there, you weren't wrong. You made some money, but 5,000's the lid. I'm watching that for the rest of today. Absolutely watching that for the rest of today. Huge move. Huge move. Boom. Where did we open? Where did we open that bar at? The high, let's see. The open right there is 49.67, and we went right up there to 5,000 and sold off. So how can we trade it right now? Let's go down to a 1 minute chart and see. Coincidence? I think not. Not interested. I'm not interested in trading gold just yet. We have to see something else happen. Let's go over here to our 920 EMA crossover and try gold. Try gold on the 1 minute. Okay. We have a nice, well, here, right there was your crossover. We've got an opportunity potentially to work a sell, but it's got to set up first. 5,000 is everything in gold. Be very careful with what you're doing right now. If you wanted to buy it, you probably could, but it's risky. It's risky, especially right now. Sellers dominated the action from 5,000. The other question is where are all the other sellers at? Are there more sellers? Are they all coming to the party, coming to the rescue? Difficult to see. Great Britain pound USD started to rally a little bit. We didn't get our level 135.40. You can see we were right down in that neighborhood, right around 130. Let's see, 135.86-ish, and now we've reversed course. So now we're moving higher here for the British pound. Gold's interesting. Let's get out to our 9 EMA and take a good look at what's happening in the gold market here and see if we in fact have an opportunity potentially to have a buy signal. So this is a good look at our 9 EMA strategy. This is what it is. Steve Francis, good to see you. Steve, welcome. What you have here is a situation where you had a buy signal a while back on the 5 minute chart. It paid you off huge. Okay, that's all fine and dandy. When we get our RSI above 70, we're looking to sell the market. When it's below 30, we're looking to buy. And our trigger is when we get a bar that crosses over or under that 9 EMA. Very, very simple strategy. And you can see we have our EA coded, loaded up, and ready to go. And it fired right there, give you a great signal. So let's dial this down to a 1 minute chart. All right, this is exactly what we're looking at. This is what we want potentially to get involved in. All right, big picture. What's happening in gold? You guys want to trade gold? Let's trade gold. What's happening in gold? Is it bullish or bearish? It's neither. It's neither. This is what we call a sweep. Market got swept back up to 5,000. Seller stepped in, put a lid on it at 5,000. That's interesting. That's the second day in a row where you've seen massive selling from right beneath 5,000. Are the tides starting to turn in gold? I have questions now. It looks to me like somebody really wants 5,000 to be the top of this thing. Now, I don't know if there's enough sellers there to get it done, but I know that I'm not buying this market until it goes over 5,000. Now, if we break above 5,000, then yeah, we'll start talking about exactly how to build a long trade. For right this minute, according to this strategy, this 9 EMA, right here, we rallied. We got it deep into overbought territory. We are looking to sell. What is our signal to sell? Signal to sell is going to be a close beneath the 9 EMA. Now, here's the kicker. It has to happen within a given period of time. 7 bars. I've assigned a 7-bar lag to this strategy. Why 7? 7 looked to be pretty good. Anything after 7, boy, the market typically gets very, very choppy. Anything under 7, you don't have enough opportunity potentially to get in with your stop loss right where it needs to be. Sometimes, like right here, that'll work. But, you want 7. If anything past 7, is going to be really difficult. The sweet spot is like three or four bars. That way you have a nice swing high there. Okay, so what's happening right now? We're starting to develop a trade. You can see we just went down. We bounced off of that 9 EMA. We're going to need to get the sell. In order to get the sell and for us to pull the trigger, what has to happen? We have to have a bar close beneath the 9 EMA. That's all there is to this strategy. Now, there's an 8-minute video on that page. There's another 5-minute video showing you how to load up the EA. It's all right there. The PDFs are there. Everything's there. The question is can you make this strategy work? And that's all predicated upon what? It's predicated upon your ability to align risk and reward. Okay, Bitcoin, 1 minute. We just got a sell signal. You can see right here. Boom, there's our alert pops up. Let's go over to Bitcoin, check it out. Okay, there's your sell on Bitcoin. Interesting. Do we want to take it? We could. We could sell it right now if we wanted. All right, let's go ahead and sell it. Where would my stop loss be? Stop loss, you got a couple of options. You could put it right above your trigger bar there or above the swing high. I'm going to play this one really tight. My percentage on winning is going to be down a little bit, but let's go ahead and do that. Now, where's my profit target? I recommend at least a 1-to-1. Now, even with a 1-to-1 ratio, I've only got to hit about 60% of my trades before I have a solid edge. 6 out of 10. I feel pretty good about that, pretty confident. Now, if you want to use market structure and shoot for the big money, you can use stuff like this. Put it way down in here. Do that. It's up to you. 1-to-1, 1-to-2, 1-to-3, 1-to-4. That's all your decision. This right here, though, a nice little sell develops in Bitcoin. Let's put on a nice 1-to-1 trade and see exactly what happens. See if we get a little love here. Market's coming off. It's coming our way. You can see in our trade monitor, we're about at even, though. And remember, when you're trading these pairs, this Bitcoin USD, gold USD, silver USD, the spreads are a big deal. The spreads are a big deal. So personally, I don't mind this trade at all. I'm not going to risk that way up there. It's too much in this instance. I'm just going to go ahead and take, if this reverses against us, I'll take the small loss. I'm not worried about that. But what we're looking to do is we're looking to fill in some of this rally. Do we get it? Don't we get it? Well, we got to see. We're fighting a little bit of a trend. Not much of one, though. We'll see exactly how this one pans out. What we really want to do is get over to our gold. Now, gold, this one's flattening out beautifully. We have an opportunity potentially to sell this underneath that 9 EMA, which is exactly what we want to do. But we got to get the setup first. Let's go back over to Bitcoin. Bitcoin's starting to come in our favor. Absolutely love it. Let's go down and hit our profit target and fill us up here. Now, what do I want to do right now is a trade management. This is going to be your key to success in the market. I don't care what your strategy is. What do you do right now? We're ahead. We had a little bit of money. Okay, now we're back behind. What do we do? In this instance, I got this question yesterday from a seasoned trader who's had some success in the market. Said, Shane, where should my profit targets and my stop losses be? Showed him the 9 EMA, showed him exactly where to put them. Shane, when do I move my stop to break even? If we would have went to break even, we would have got stopped out right there. That would have been a zero trade for us, a scratch trade. And the problem with that is if you get stopped out a lot on that break even move, if you get stopped out enough on that break even move, you're not going to be profitable. The bottom line is this. Eventually, you're going to run into trades that just go against you immediately and stop you out. Those are losers, born-again losers. Loser begets losing begets losing. Believe me, it's going to happen to you. The ones that run against you immediately, you take that loss. The ones that come back and stop you out at break even, you took that initial risk, but you didn't get the money. That's brutal. And then the last one is if you just let these things play out. Over time, it may work. This one might come up against us and knock us. We had a pretty good move. We had a chance to get in. All right, dollar yen, this thing's firing. We have a bid. What do we have here? Where was the signal? 5 minute there. Euro USD, nice gap right there. We're going to have to analyze that one on our other charts. This one's interesting. We had what did we have here? Gold. Gold's going to set up nicely. Silver right there. Silver's not there. I thought we had one on the yen. No, we didn't. In any case, we got the alert. Bitcoin's still coming off. Bitcoin's looking pretty good. Right there, we hit our profit target. No fill. Now it's your decision whether you want to go flat or not. I'm just going to let that one bleed. We had a pretty good profit target down there, though. Here comes our sell signal, it looks like. Or does it? Let's see. That's bar 1 right there. Okay, boom. 1, 2, 3, 4, 5, 6, 7. It doesn't look. We may get a signal. We may not unless my count is off. It really depends on where that RSI was still in overbought territory. And you can see right there, we didn't get the signal. It's too far removed. How about a 5 minute? 5 minute looks even better on gold. Take a look at this chart right there, overbought territory. We get a 5 minute bar close beneath that zone. We're going to have a real shot to do it. So something to think about there. One of the hard things about this, then we're going to go to our Euro USD. This is systems trading right here. What happened? We went down, we hit our target, and we did not get filled. What does that tell us? That's tough. Sometimes you just go flat right there. Sometimes you do this. Sometimes you say, well, we're taking added risk. Let's move it down. Let's shoot for some real money. Yeah, let's shoot for a little bit of market structure here in Bitcoin. If it rallies against us and we get stopped out, fine. If it goes down and maybe we get paid a little bit extra, let's let that one simmer for a while and see exactly what happens. Remember, consistency is the key. I don't care if you move your stop loss to break even. I don't care what you do. Just be consistent. This one, let's let it play out and see exactly what happens. We already hit our first profit target. Probably should have went flat right there, but, we're doing 50 things at once. Now the market's reversed against us. It is what it is. That's life. 1 minute chart. You're trading 1 minute charts. You're going to take a lot of trades. That was a pretty good trade, though. Went right down and got our money. See what happens. 5 minute chart, I like this one more. Longer durations give you a better chance to win. US dollar, Japanese yen. Let's back this off to a 5 minute. I like this too. Pretty good area right here. Take a look at what you've got. 5 minute chart, low 28.23, oversold territory. What do you have right there? Got an opportunity to get a crossover above that 9 EMA. That's a pretty good trade. It's a pretty good trade. All right, I got way behind on the live chat. I get caught in, though. It's systems trading. Interesting stuff, that's for sure. Let me see. Euro USD. Yeah, we're going to go ahead and go Euro USD here in a second. Let me see. Frost Gamer, I think we need to avoid the gold today. Yeah, I don't know. That 5 minute gold signal, if that develops, that looks pretty good to me. Maybe even a 15-minute gold a little bit later in a day certainly is possible. Hello. Now CPI comes out right. 13. Yeah, CPI. We're going to look at the actual numbers here in a second, DQ. But yeah, good point. Let me see. Paulo, I'm late. What happened? Well, the number came in largely as expected. No huge surprises. I wanted a surprise just to get some action, but we didn't get a tremendous amount of action there. Go sell for gold. Go for selling gold. Yeah, I think a selling gold, if it sets up and comes our way, we could be pretty good. Great Britain pound USD looks okay with the EMA. Yeah, we can go ahead and pull that one up as well. Then I'll take a look at that. Gold, Raphael, gold versus silver. Which one is better to go long now? God, they're both so risky. If I was doing it, you take a look at your 9 EMA on your silver chart. I'm not interested. I'm not interested in going long. Let's go ahead and pull up some Fibonacci's maybe. You can see there was your crossover on gold before the number came out. There's your 1 minute chart on gold. So which one's better to go long right now, gold or silver? It's hard. It's really hard. Let's go to a 5 minute. Let's back this off a little bit. Okay, so this is an interesting formation. What you have is your big move, and then you got a couple of pullbacks here. If we wanted to trade this one using Fibonacci's, I'm not doing anything right now. 38%, bounced off of 38% of that pullback twice. That's a fantastic scalp. Still suggests we're sort of bullish here. What does it all mean? I really couldn't tell you. We're sort of in no man's land right now. I think if you buy gold from this level, you got to be really quick on the trigger. I wouldn't do it. I wouldn't do it. Big move here. There's your pullback. If I was going to bid gold, 49.75, maybe somewhere down in there. Let's go ahead. Let's trade a little bit here. Let's go to order. So what could we do here? Buy, limit, something like that. I don't know, 10. What is that? Legitimate. So buy, limit order. I would be looking to dial that limit order right in here, right above our 62% level, which should be, we could go from 75.50 and see what happens. That would be my bid more than likely. Let's see if we get it real quick. It's got to get placed in the queue first, though. Okay, so there would be our buy limit order. Remember, these are all demo dollars. The leverage I use on these live streams, you don't need to be using 1% to 3% on any trade of your available account balance. That's fair. That's even 3. I'll even look the other way if you want to go 5 or 7%. But you don't bet everything on one trade. Make sure that you're not doing that because it will not work. Eventually, you will lose. It will happen. So that right there, if you wanted to scalp this gold move, 62%, right around 49, 75, 50, that's not bad. That's not bad. Let's see if we get it. Interesting. Okay, here we go. So what do I want out of this trade? Well, there was sort of our move right there. What do I want out of it? Let's go ahead and put our take profit. I don't know if we're buying, let's see, 75s. I don't know. Let's put it right up in here. Maybe 80, maybe 79, 79, 88. Let's do that. Not a very big trade. That's the move we wanted. Bounced up. Let's leave it and see what happens. Do you buy right now in silver? Big move. Real similar price action to what we're having in gold. 78.50, 78.45. We could try it. Silver's a very challenging thing to trade right now. The volatility is so wild. We could put something down right there. What do I want out of it? Something like that, maybe. 78.66. Let's go right there, 78.69. Let's try that. Now, the volatility is so great, you could really get hurt doing this. Stop loss, you'll notice I don't have one down. It doesn't mean that I'm not going to be executing very quickly here. Let's take this down to a 1-minute chart. How am I going to execute? I'm going to want immediate positive price action off of our entry. My stop loss is going to be relatively tight, but I'm probably going to let this one go at least 30 seconds to a minute. Let's wait and see exactly what happens. We're very, very close to getting entered right now. I would say that silver probably gives you a better chance to grab this scalp. However, we're not going for a ride with it. And right now, I don't like the way this market's setting up. We've got 2 minutes where we should have been filled and already paid off. So for me, that's what I call frustration. I'm not interested in doing this now. I really am not. We went down. We tested my entry twice. We didn't get filled. That's going to hurt our probability a little bit. Okay, so I believe our gold trade just went long. Let's go ahead and wait on this silver trade. Yeah, so there's your gold sort of developing here. I don't particularly like what's going on, but we're going to wait a minute. Sort of what we're looking for here. It's a different chart, I know, than the Fibonacci, but okay, now we went positive, so this is interesting to me. I'm finding that, okay, are we going to get that 49.79? We're back in the green. Do we have an opportunity to get it? Okay, there's the big bump. So we took about a minute draw, something like that. And I know this is a different chart with a different strategy on there, but just don't get confused. We took that long position on Fibonacci's using our gold, right? Using our gold right here, we're getting a pretty good idea of how to manage this trade. We're getting a pretty good idea how to manage it. All right, right now we're up a little bit. The market's starting to rotate, but now I know pretty well where my stop loss needs to go. We've had a good minute, a bullish minute. Now, it may hurt us. You can see this sell setting up, but right there, stop loss is here. I'm going to go ahead and just stop myself out right beneath that 1-minute bar. You can see that the profit target, we're in an interesting position because we've got about a 1-to-1, a little bit better than a 1-to-1. So the risk versus reward is in our favor now. We've got a positive trade rolling. We have a pretty good opportunity to be profitable trading this type of trade over a long period of time. Our risk versus reward is positive. Now, we did this in a dynamic, okay, we just won the gold trade. That's fantastic. So that's a really great thing. It's good. It's not bad. This right here, let's see, where are we at? This one right here, incredibly frustrating on silver. We didn't get filled up yet. Let's go back over to our gold. I'll show you exactly what happened. 5-minute chart, pretty good time frame to be scalping. There it was. We nailed it. Absolutely nailed it. Came right down, bounced back up, 62%. Love 38s and 62s. Those are really tough to mess with. Really tough to mess with. So that right there was a pretty good scalp on gold. As far as the rest of the trading day, it looks to me like you're going to go back up and test 5,000. So remember, I said I'm not interested in buying, realistically buying and holding until we get over 5,000. I stick to that. This was sort of a short-term scalp, retracement back down into that CPI range, and then a bounce. So that was a pretty good trade. Let's get back out to our 9 EMA, see how that's doing. What happened here? And let's see, that's going to be your silver market. You can see you're actually working a silver sell here. If we get a 5-minute close, that's not a bad way to do business. Let's check out our Bitcoin. Where's this one at? I mean, this is trading. See, we moved our stop loss down to shoot for more money. Now the market reversed. This is a pretty damn good trade. Any way you slice it, nice signal, nice sell signal, really an aggressive stop loss, and then we came down beautifully. I mean, in my book, this is a kind of trade you really can't take a loss on. We've given this a lot of opportunities to go down and get our points. You know, if you want to leave it, if you want to extend it even more to take a position, you can. If you want to try to bring it up and get paid off, you can. But that is exactly what we're looking for out of this strategy. Nice downward trajectory, a good move. What did that come in at? About a 1.5 to 1, 2 to 1, somewhere in there, 1 to 2. That's good stuff. That's good stuff. So to me, pretty good trade. Not a bad trade at all. All right, let's go ahead and get back out to the CPI itself and see exactly what these figures said. Now, I want to know exactly where core was. I didn't know where core was just yet. This is going to be an interesting read for us. CPI, the full Monty. Let's have a look at it. CPI month over month, January, 0.2%. That was beneath what we expected, so that's actually an incredibly strong number. An incredibly strong number. That suggests that CPI is coming down a little bit. Unbelievable. Really a surprise. Extremely dovish for the U.S. dollar. CPI year over year, 2.4% compared to 2.5%. That's the one we were really watching. Staggering number. Absolutely staggering number. 2.4%, way beneath expectations. Core CPI, 0.3%, came in as expected. So what do you think the disconnect is here? Core CPI goes up, regular CPI goes down. Why? Fuel, energy. Energy prices are down. In essence, that's the difference. So we're going to say that it's the energy prices that are bringing inflation down. Well, yeah, but that's a good thing. That's not a bad thing. Core CPI, because it ignores energy, I sort of ignore it. Energy's everything. It really is. Core CPI 2.5%. That core CPI still fell. Incredibly dovish. Incredibly dovish. Real earnings, I don't know. Core CPI index. It is what it is. CPI index went down again. It's really extending our pattern here. Let's go have a look here. Very nice plateau. Very, very nice plateau. Ticked higher a little bit. So that's going to be a little bit worrisome. Still, though, flattened out. Hasn't really exceeded this September level. Not bad. Not bad. The next one's going to be more important, but that was a big level. That was a big print. No doubt about it. Big time print. That's for sure. So interesting stuff. No doubt about it, guys. Interesting stuff. As far as what can we look at now? I mean, we looked at pretty much all the markets. Great Britain pound USD is still on my radar for today. US 100, you can see is rebounded. That's going to be bullish for stocks more than likely. Gold, very, very nice gold scalp. Bitcoin starting to reverse a little bit, whatever. Let's take a look at Euro USD. Interesting stuff. Let's go ahead and just have a look. Okay, we did this exercise for NFP. 30-minute candle, right? What was this? February 11th. That was your NFP candle. What are we still doing? That. Dead center. Very simple strategy moving forward, probably for the rest of today. You're going to want to sell the top of this up in here. You're going to want to sell it. You're going to want to bid from down in here. This market's in a complete rotational pattern, right around 118.75, 118.50. I mean, in my view, this market has no intentions of moving until we see some real policy shifts here in the United States. So to me, this is easy. I mean, it really is easy. This market has no direction. Look at this. NFP comes in, bam, we crash. CPI comes in, bam, we rotate. This market is in complete rotation between 118.50 and 119. Sell 119s, sell 119s, buy 118.50s. It's that easy. The key, and the reason why a lot of people would lose money doing this, is because they're going to be a little bit greedy. You don't need to try to get in on a huge move. You just are playing a little bit of a rotation, 15, 20 pips can get you into some pretty good trades. It's not bad, not a bad game plan at all. That's for sure. Let me see. Matt Ann, good to see you. Ponsel, welcome. Matthew Biggs, good to see you. Matthew, welcome. NH, go sell gold. You want to sell gold? Sell gold from 5,000, 49.90. So like if we were building, our gold sell, it's right there. Beautiful pullback bid, though, off that Fibby, right? Right there's your sell if you want it. The only problem with that trade is if it breaks up above 5,000, you could get burned. We can take a shot at it, though. Sell it. Let's see. NH wants to sell gold. All right. Where would be a good entry? You want to be right up in here somewhere. We'll go 49.99.30. What do you think's a legitimate profit target for this? Something like that? Potentially. Where's a good stop loss, do you think? This is one that I would definitely have my stop in the queue. So I would go right there. We'll go to 403.78. We'll dial this in as just a strict 1-to-1. That would be the scalp. Is it tight? Real tight. Could it work? Of course it could work. Something like that. Can silver come down? Yeah, silver can come down. Anything can come down. Let's go over to our gold chart here. Let's pull silver on our 920 EMA crossover. Interesting. These are no good anymore. Get rid of those. You know, it can definitely come down, but what I would be really stressing to any traders out there that want to get in here and start trading, you need a way to do it. You really need a way to get in with some structure here on silver. If you just take a short, it's really problematic because silver is number one, it's so volatile. It's up almost 5% today. This could be a really challenging thing to do, to get accomplished. If I was doing it personally, I don't know that I would be interested in selling until I got a signal. So if we went back over maybe to our 9 EMA and we took a look at, let me see, 5-minute chart. You know, if you get that bar closed beneath that 9 EMA, it wouldn't be a bad trade. It wouldn't be a bad trade at all because you could actually take this sell, lock yourself in right up there, and be in a pretty good position. See, I like that idea. That idea doesn't bother me. I like that. What I don't like is just selling right now just to sell. You got to remember, you're up big. There's been a lot of bidders in silver. If we're just going to take a short just to take it, you're going to run into trouble. So let's see if this one sets up right here. And if we get a bearish close in T-minus 2 minutes, we'll go ahead and set up the short. It won't be a bad trade either. I mean, 5-minute chart, silver, beautiful swing high that we could put our back against. I really like that idea. But you definitely would have an opportunity here to maybe shoot for the bottom of this CPI range. Definitely possible. Definitely. Let me see XTIL. I'll be looking to sell gold a bit higher at the 5,022 area. Yeah, there's nothing wrong with that. There's nothing wrong with that at all. Let me see. D. Lamy. Good to see you, D. Lamy. Welcome. How to set up an MT4. Well, check out the Trading Academy. You're in the How to Trade trading room. Go over to the Trading Academy. We've got a bunch of videos in there. Check those out. That's for sure. Your thought on the Great Britain pound USD? You know, that'll be the last one we pull. I'll pull that chart here in just a second. Let's wait and see if this silver sets up. Steve Francis, hi Shane. Does that mean the possibility of an earlier rate cut? It's a good question, Steve. Let's have a look. I've got the odds right in front of me. We have that kind of power. Okay, we're still looking at about 90% that rates stay the same at the March meeting. About 70% that they stay the same in the April meeting. The June meeting's where we're looking for our first rate cut. So it didn't do much to the odds. It didn't do much to the odds at all. And the reason why is you're going to have a new Fed chief, and the new Fed chief is going to be probably the first one that cuts interest rates. I mean, let's be honest. I mean, Trump has been after Powell. He's pissed Powell off so bad. I would be surprised if Jay cuts interest rates. I don't see it happening. I think that you're going to see him go through the May meeting, or I don't know what his last meeting is. It's either in April or May. I'm not sure. Yeah, April 29th will be Jay Powell's last meeting as the Fed chief. And then they've got to get this Warsh guy. They got to try to get him approved. But all of a sudden, he's got some questionable ties. He's got some interesting ties to folks that were associated with Epstein. I don't know what's going to happen this spring, this Epstein thing. I'm going to do probably a full report on it Monday and dive into it. But we're seeing more developments by the day, and the heads are going to start rolling in the financial sector. That's for sure. that may impact your new Fed chief. It may. I'm not saying anything. I have no evidence of that, but there's a lot of rumors out there right now about everybody. And the lack of the fully redacted and all these different things that people want. They want another 3 million documents from the files, and then they want everything redacted. And we just don't know as traders whose name is going to be implicated. May be accurate, or it may not be accurate. Now, I don't personally think Warsh had anything to do with it. We haven't heard that, but some of the folks that he was involved in that banking community did. And that's going to be a real challenge for our financial system to sort out later this spring. So there's major surprises on the way, and all of this could delay the naming of a new Fed chair. We've already had people in Congress threaten to not approve Warsh until Powell's investigation has been stopped by the Department of Justice. There's so much going on that's outside of the scope of what we usually do that we have to at least admit that, yeah, this stuff all could have a major, major impact on the financial system. And the number one thing that has brought stability, or a relative stability, let me put it that way. The normal thing is the United States Federal Reserve moving interest rates and other central banks around the world following accordingly. That's been how they've done business for the past, since 1912, Jekyll Island. So any change to that is going to really send shockwaves through it. And this type of news cycle and all this chaos is definitely something that's happening. And we have to acknowledge it as traders, or else we're doomed to maybe fall into a major trap. So to answer your question, Steve, does that mean the possibility of an early rate cut? Theoretically, it should. Inflation down, jobs up. Will it, though? No. They're going to hold rates firm because Powell doesn't want to cut. And why would you do anything, right? Life's good. Inflation's coming down. Jobs are going up. Everything's perfect. Our rate's perfect. I think it's a really delicate situation. That's for sure. All right, let me see. Ahmed, your thought on the Great Britain pound USD. Okay, let's take a look at one more chart, and then we'll go ahead and pull off for today. This right here, we almost got our sell limit in gold. I'll let that set for a minute, but that's risky. Great Britain pound USD, 135.50s. 135.41, 135.40 to 50 is a fantastic buy. That's definitely got to be on the front burner for next week. As far as what to do right now, I mean, the market really doesn't have much of a direction. Here's your 4-hour chart. You can see we've sort of really traded inside of this area right here. And you can say, well, let's just go ahead and pull it. I'll show you. What is that area? It's your NFP range. So the pound came off a little bit more. I guess I can show you the chart. The pound came off a little bit more than the euro. Well, hang on a second. Having a bit of a mechanical meltdown. That's what happens when you're over a mile high and it's this cold and dry. All your mechanical stuff, computers just fry on you. In any case, right here. So you're still trading inside of that NFP range, and you're on the rebound. What do you think is going to happen next? I'm looking to sell right up in here probably. Top of that range is up right around, 136.82. You're probably going to be looking to sell 136.75s. Maybe bid down here. This isn't a bad bid area either. We've got sort of a longer-term Fibonacci right around 136. It's not a bad zone at all. So to answer your question, the Great Britain pound is sort of in no man's land. It's really tough to trade the pound or the euro unless you're trading rotation. Right now, I wouldn't be trading trends, no pullbacks, nothing. You got to have a move before you do anything like that. Okay, guys, let me see. Osama, are we buying the dollar or yen? I don't know. Not yet. No. $9 EMA. You can see we were sort of down here in oversold territory. This is going to have to take a little bit of while to set up. I'm not interested in bidding just yet. If we wanted to go to maybe some Fibonacci's on, say, the dollar yen, we certainly could. These majors are in a real tough position. So that's your week. So if I'm looking at, these are monthly Fibonacci's. So if I'm looking maybe to make a play, 152.50 is a pretty good bid zone. 150, 151. I got to see more evidence. I'm not interested in selling right now just because I see the big bearish week and I get it. But maybe if you got to pull back up here to like 154, you could sell late in the day. I wouldn't mind that, but I highly recommend not taking home any live positions over the weekend. I think that's a tremendous mistake and one that you don't want to get caught up in. I think that could really hurt you, especially when these markets, especially metals. If you're going home long or short, metals with Monday's opens have been absolutely crazy. You're probably going to get a margin call. You're either going to make a fortune or you're going to get a margin call. So you need to be very careful with what you're doing with metals over the weekend. As far as holding any other position, I find it problematic. I really do. There's so much volatility and so many X factors. I mean, this Epstein thing, if huge news breaks over the weekend and all of a sudden they unredact everything and give you the other three, we have no idea who's on those lists and what's going to happen. Absolutely none. No idea at all. So I would be very, very careful with that. I think that you need to be smart about what you're doing. Well, we might as well just check on our pet rock, Bitcoin. You can see it really did start coming our way. Beautiful trade. Absolutely beautiful trade. Let's go ahead and close it as a winner, $184. Great trade, though. This area right in here, we had our stop loss really tight. A few pips above that signal bar. That retracement right there almost got us. Came down. I mean, that produced, what, a 1 to 2, something like that? Beautiful trade. I mean, that's exactly what we want to have happen out of that 9 EMA. That's what it's designed to do. This trade right here was one I thought we were going to get while I was talking. You can see this area. We were selling 49.999 30s, and it went to 49.97. We were really close. That right there, selling 5,000 though. Very attractive. Very attractive. That's for sure. All right, everybody, I'm going to go ahead and sign off. We got a couple more comments. Let me see. Oktara, I made a ton of profit on silver. Yeah, baby, that's what I like to hear. I like to hear about profitability. Love it. If you just made a ton of money on any one trade, maybe you were the one that sold gold at 5,000 and walked away with a stack of cash, a stack of Benjamins, take it home for today. There's no reason to sit here and be greedy the rest of the day. Take that big win. You know, what's Valentine's Day tomorrow? Spend it. Go out and have some fun. Spend it. I mean, you know, you could sit around and trade, and if you just had a big winner, I would just leave it a big winner. That's for sure. All right, let me see. DQ Wax, what do you think now on Bitcoin? Crypto for short future. Well, I mean, I covered Bitcoin to start the stream with, so I get it. If you missed it, that's cool. I'm looking to buy 58s, you know, realistically. I want to see 60 tested. I think we're going to sell off under 60, and that could get really ugly down there. So I'm not – a lot of big money swept in and bought Bitcoin, and they think that it's going to go way up high, and it may. It really may. I don't know. I'm still long-term bullish. I really am, just because I think that the Trump administration could definitely send this thing to the moon with deregulation, rate cuts. You could see an aggressive situation with Bitcoin where, yeah, things start looking really good. Right now is not the time, though, and I can't get my head around why it's so weak. Profit taking, maybe some retail longs have been forced out of the market, but I can't, for some reason, I keep coming back to this Epstein thing. I feel like it's the time bomb that's waiting to go off, and it's getting worse by the day. There's more inquiries. This is going to be on our front. This is not going anywhere. This will be in the center of finance for the next 18 months. It's not going to be solved. It's not going to be resolved anytime soon. Eventually they're going to let the other 3 million documents of the file out. And if you guys know what I'm talking about, great. If you don't, that's fine too. There will be more investigations. This will be the number one issue this year. It's an election year in the United States. This will be the number one issue. It's not going away. And I expect by the end of it, by the time it's all said and done, I expect some CEOs to be stepping down. I expect some big-time bankers to be stepping down. I expect politicians to be leaving their posts. A lot of people are going to be impacted. And what that's going to do for us is going to bring a lot of volatility in. And I can't help but think crypto is a big part of this. It feels, I mean, since this Epstein thing started gaining steam into last into last October, when it really started coming front and center. I mean, it started last spring, and that was fine, but it really kicked up after the government closed down and then reopened. we have seen nothing but selling, consistent selling in Bitcoin from 125,000 all the way to 67,000. Crazy stuff. Crazy stuff. Let me see. Sell or buy for future Bitcoin, 1 minute time frame. No idea, DQ. Can't do it. You're absolutely welcome, Matthew. All right, guys, I'm going to go ahead and sign off. Bobby Bob, you're welcome. Have a fantastic weekend. We'll catch up Monday. Yeah, this one's gone way too long. I'm going to go ahead and sign off for now. You guys have a fantastic weekend. If you made a stack of cash, take it home with you. Remember, the 9 EMA strategy, if you're interested in maybe executing trades in a structured fashion, feel free to get started with it. We might do a webinar with it next week and trade it live. We did pretty well trading it live today. We wanted that silver trade to step up for us and get developed, but it just didn't happen. That's okay. Nothing wrong with that. All right, guys, lots on tap. We're going to be back next week with another slate of live streams, trade ideas, and analysis. For now, it's time to take a break. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.